Video morning brief for the U.S. stock market. It's May 10 and it's 7:40 a.m. Eastern Time and Rich Positive Critical Point. Not much for news today on the calendar. I think there is API's energy stocks report, and then tomorrow we'll get the government's stocks report. Nothing on Friday the 13th. And then Thursday, of course, initial jobless claims, some of the normal weekly data. But the big one tomorrow, of course, is the CPI report. We're also going to get an earnings report in the sense of income for people, I believe. Okay, so tomorrow's the big one with the inflation story, all right? What we have is yesterday was another big meltdown following through from the weakness of last week. I'll show you on the weekly chart. It was rather fascinating last week. It felt like, extremely weak, but when we look at it by the end of the week, we find it was really mostly unchanged. So somebody was buying in a lot of that stock being sold. The market was working to try to stabilize itself. But yesterday it broke loose to the downside again, and we have people who are concerned that it's not holding the 4,000 level. I know Art Cashin said, gee, if it can't hold the 4,000, it's probably going to 3,800 as next chart support. We have several people out at 3,800 to 3,600. We still have some quants. Kolanovic of JP Morgan, says it's still buy the dip, but people have really gone after him, showing, well, he's been buying the dip almost every day all year long. So it's interesting how we all get caught up into things. At any rate, it looks like to me, yes, this is going to resolve, and later this year things are going to be doing better, and I think next year is going to be a great year. So I'm not changing anything that I forecast back in December for this year and next year. We knew it was time for the economy to back off. We knew we might have to fight inflation. We knew it was time for what I call a bear market, but what most people would probably call just a correction. And even I call it a correction when I look at the bull market for this decade. All right, anyway, zooming in here, the model was forced to call a level 3 top right there on May 5th. It was after the we had to wait for it to come down, show us the weakness. And the reason is, even though it was the earliest allowed, met all the conditions, it just didn't quite seem ideal. We just couldn't be aggressive enough and just had to wait to see someone else sell first, get some weakness in there. And I think the model still jumped on it in a fairly timely manner. And now, of course, it's followed through, and we got enough evidence. The model is fairly confident that was an L3 top. A strange one in that it bumped its head around that 4,300 level, and we got 3 gaps on the cash market. Someday they will be filled. It'll go back to 4,300. My guess is when it does that, it's just going to keep on going to 4,500. Some people I watch think 4,400. I'm okay with that. It's just eventually it'll probably go to 4,500s. Okay, now, and I'm not saying 4,500 is a round number, I'm saying 4,500s really, okay? In the meantime, of course, the trend is down, no sign of a bottom, and the model has had some issues here with some of these level 4 swings. We thought this was a level 4, should have had a level 4 yesterday. It took too long. Now, granted, the level 4s are only 70 to 80% accurate, so the point is, it may have bottomed yesterday. For level 4, it just bottomed later, and we just couldn't keep up with it, okay? And they did rally overnight. But now, if they're going to hold this rally, I got it up 28 now, that's a delayed quote, but if they're going to hold this bounce overnight, we're going to get a gap up in the cash market. Well, the cash market is going to have to make some decisions because there's a little bit of a gap here left yesterday, so it needs to rally up and fill that gap. Want to rally up first, then say, oops, I got a gap created today, I got to go all the way back down and fill that gap. There's going to be a lot for the day traders to play with here, and they might just get away with it, okay? But what if they filled today's gap first, they sell it first thing this morning, then maybe they rally it the rest of the day. And we have to keep in mind that CPI report tomorrow, they may want to do some buying into the report. And then we'll get the report, and if they like it, they'll just keep on buying, is my guess, but just a guess. We'll see when we get the data and see how they respond. If they don't like the report, well, we're going to see some more selling, and that's the dilemma. Is we've got alternate forecasts where slightly 60% probability we're looking at a level 3 bottom now into the report, it's up and away, and unfortunately 40% probability it'll be even lower after the report for a few days even. This can still be a down week. Now the good news is they filled the 40-20 gap that a lot of the technicians and chart people were looking at They filled that in the cash market and it went below it. That's okay. Now what they're looking at is how quickly will it get back above that 40-20 gap and move forward. And they might call that a bullish signal. They might say the market is washed out. Not finding a lot of evidence of washing out, and I don't believe in the definition of the capitulation. I question how well that has worked. I don't know if it's ever worked as well as some people think, but certainly in the recent decade or two, there's been a lot of discussion. The market doesn't wash out the way it used to, and so we have to be cautious that if we're picking up signals that an important bottom's coming, we got a buy signal. We kind of have to be cautious of worrying too much whether we really saw capitulation. Capitulation is the washout where everybody's done selling. They just can't stand to sell anymore or sell any lower. And it's usually a fast-paced move. Slam it down, and you like to see it, slam it back up and say, okay, it's over and done with. All right, any rate, I'm concerned that the level 4 bottom occurred sometime yesterday going on into actually May 6th, now that I look at it, or May 6th, maybe going into the start of the next overnight trade. And this means yesterday's low is unfinished business. The overnight low is unfinished business. Unfinished business means it needs to go back down there. They need to sell some more. Or the buyer's waiting for another chance to buy it at that recent low. So I'm concerned that it can put in a level 4 top first thing this morning, and it's down not in tomorrow, which is how I normally work with a level 4 top. The thing is, it may only back off some today, place the true level 4 bottom today as well, and that's a setup to be up not only tomorrow but even higher the following day, which is a clue that even if the inflation report was assumed to not be good, it may already be dialed in. They've beaten the market up so much that nobody cares, okay? And it also, of course, leaves the door open for a pleasant surprise that the report is a good one and people get built up, okay? So we don't know how well those scenarios are going to work on this level 4. There's too much fuzziness going on here. People are too emotional. I mean, this was a historic sell-off. For the start of the year, it's one of the worst since 1929, 1930 scenario. It's way out of line. It's just strange, okay? And at any rate, we'll see what we get here, but I'm wondering if we don't get a ready, set, go pattern here where this is the ready, this is the set, and it goes to a new high for the day during the day session, then maybe they're going to put it back up to fill that gap. So let's move over here to this gap, and yet my gut feeling is they really actually ought to put it down this morning. I would prefer they sell it, actually. Some more than what they're doing right now. So here's yesterday's gap. It's clear, it's large, it's sizable, it's panic driven, okay? And there is a lot of discussion. Even that quant analyst is saying this seems to be more technical and fear and really doesn't have a lot to do with the economy and overall business. Notice yesterday the market respected our brand new downside targets. It came down to it, stalled around it, took a stab towards the lowest, rebounded, stalled around it, snapped up to near the next one, came back, still stalled just a little bit below it, so maybe not precision, but it's working somewhat. Kind of ticked up one last time right to it, and then they hammered it into the close, okay? And notice they closed practically right on it, okay? Fascinating that they would respect that, come up with the same calculation. As does make you wonder whether this is more driven and mathematically driven and not necessarily business. And of course, on a very short-term basis, it really is usually mathematically driven. A lot of computerization, a lot of systems types trading. Even the fundamental people will say, all right, I'm bullish now, but let's follow the intraday and let's see what's going on and let's talk to our technical people and where's our quant people that are mixing price and fundamentals or just price, and what price levels do you have for us? We need greater detail. Any rate, I think if you see the cash trade above 4,034.30, there's an opportunity to move a bit higher. What would be more encouraging for the bulls is to trade above 4,050.21. That would probably put it above our objective of 40.55. And they're probably going to say it's now close enough that that gap is going to act like a magnet, that even if it shouldn't go up there for the larger trends and the fundamentals and everything else, at least could be a day trade. And so they could run it up, fill that gap anywhere from around 40, 80, on up into 41.31 or something like that. Get up into some of those old upside downside targets that work as support and resistance. Hourly chart oversold and was giving us some inharmonious action, meaning the indicator didn't go down with the price. It started to refuse to go lower. Usually a telltale sign you're working towards a bottom, increasing odds for a better bottom, meaning you don't need, most people just want it oversold and turn and away it goes. But sometimes it's oversold and it becomes a process, okay? All right. Now, I don't have much left for downside targets. We've used the best we have. So let's switch over to daily. Maybe I'll have something there. Let's see here. I just have to tell you, I fully understand why some are coming up with 3,800s, 3,600s. But here's our best on the daily chart. A little bit different numbers than what we're showing you intraday. But notice yesterday it come right down to it and they bought it. I'm sorry, that's today. So it's overnight. Put it down, bought it. Notice they put it back above this trend line, and there was 3 days that actually rode that trend line lower, and now it's trying to get it back above it. Daily indicators oversold, trying to turn towards a buy signal. And yes, it's getting flaky, fuzzy. We really don't know for sure where this level 3 bottom's coming in this week. And can it delay all the way to the end of the week? So we're kind of reverting to the bigger picture, just saying there's got to be a major bottom sometime this month. The market's likely to rally into June. It could rally well. The better it rallies, I think the less the chance that during July, when it should set back, that it will go as low as the May low or lower. I think there's a good chance we're putting in the low of the year and a major bottom here. Still may take us the rest of the month here. We still have debates between the NASDAQ and the S&P 500. But at the same time, we've come up with enough information that starting this week, the NASDAQ could join the S&P 500. They could start doing the same thing, be on the same page. And maybe it's this inflation report's going to help us. By the way, I'm not forecasting the inflation number. I think it's a very difficult thing. It's one of those very volatile things. It's a good way to put a kick me sign on your back. But I will say that I think it's time to dip it, and I will say my hopes is we would see a 6.8 versus the 8-something% CPI we saw last month. That's probably asking for way too much of a drop right now, and if it ever did it, man, we're going to be scrambling, I think, to get our orders in to buy. The market's just going to be moving higher, okay? Because that would, in my opinion, that would send a message we really are winning on the war of inflation already. And it's kind of early when you look at the Fed. But I think inflation was already starting to work towards rolling over before the Fed even started acting upon it. So we could get some pleasant surprises if this moves a little faster than normal. But I'm probably dreaming that it would actually give us that kind of a number there, but it sure would be nice. So if it happens, I'll admit I didn't call it because I'm not making the call, but that's what I'm kind of hopeful for, and it's really not out of the realm of possibilities here. But my guess is most people are probably thinking or hoping for just a little bit of a setback from that reading last month that was over 8% or something like that, okay? And then we'll just have to see. We also have to keep in mind when you're looking at that kind of fundamental data, one down month does not make a trend, okay? So you really need at least 2 if you want to be very aggressive, and you really need 3 months. And if it's going to fluctuate along the way, then it's going to take even more months than that to truly see that trend. My gut feeling, though, is that I think by the time we get out to August, we will see some evidence of inflation coming down. We already see components coming down, so it looks like it can work. And the way the interest rates have been screaming higher here this morning, they claim some bankers are saying 1 out of 4 home buyers are knocked out of the market. The homes are just too expensive, and the mortgage is too expensive, or the mortgage plus the price of the home is just too expensive for them. They're still seeing brisk sales and business and mortgages for $1 million homes and higher, but it's like the ones below are starting to see demand backing off. Still a very tight market. It may take a while to rebuild the inventory and supplies here for homes that might actually bring prices down. But anyways, obviously, housing is part of inflation, and we have used cars down. We have a few other things that are down. Okay. So at any rate, I like these three lines I'm showing here. And noticed overnight they respected to put it right at the upper line. The open last night was right on the line. It's just scary, because the way my critical point, probably 99% of the people don't even use such a thing or are aware of such a thing. It is possible my critical point at times mimics what's going on with Fibonacci calculations, which are quite popular. Okay, I think my critical point's more accurate, more useful on a short-term to very short-term basis. It may be that Fibonacci is just a little bit easier to use, and chances are get a little more precise with it for intermediate to long-term calculations. Okay, but I tend to use critical point for everything. I seldom look at the actual Fibonacci. Okay, so at any rate, if by chance it moves up out of this range of these lines, I would say the 5-day average is nearby resistance. Yesterday's highs nearby resistance. We got this little gap here in the futures, not as big as the cash. So we obviously know that can be a target, but it may also be resistance of where they sell it again. Okay. We might as well just go out to the weekly here since we're taking so long here. Now, we're fooling with some revisions. This is experimental. We're calling the level 2 bottom that's due this month and can occur this week. Might have occurred overnight or yesterday, but unfortunately it's iffy. It may occur after the inflation report. And again, it may occur later this month. But we do have this little gap even on the weekly. So to me, it's obvious someday it's going to fill that. But it might just go lower. It might go higher. We don't know. But it's obvious someday they should find a reason to pop it and fill it. Now, what we're doing is experimenting and turning this level 1 into a level 2 and coming up with a strange pattern only occurs 10% of the time in the history of the stock market and calling this a level 1. So this may be a mistake since it's so low probability, but everything is so extreme and the possibility of capitulation washing out. We have to consider that can be valid. We also could come up with a better scenario of higher probability, but it may only be 50-50. We can change the entire sequencing all the way back to just after the 2020 bottom. Okay? And if we do that, it comes up with this can also be a level 1 bottom. This is level 2, but this would be level 1. This would be level 2. You'd flip them around all the way back into 2020. And it kind of fits. I think I'm questioning it, but at least it gives us 2 out of 3 scenarios that this can be the level 1. Well, why is that significant? Well, the level 1 is the most important buy signal during the year. We get 2 to 3 of them. And a level 2 will always occur with them. Then there's level 2s by themselves in between the level 1s. That's why we call it level 2, meaning second most important buy and sell signal. Okay, and these buy and sell signals relate to the duration of trend, but also the change of price. How important is it? Okay, but it also relates even to fundamental data, can fluctuate along with those trends. Not always consistent and easy to work with, and there's so many fundamentals it becomes confusing at times. Okay, so we kind of simplify it by linking it to these trends. And then we know psychologically people just all of a sudden say, I'm going to buy the next 30 days. And it doesn't matter if they have a reason or not, they're going to do it. And the model picks up on that we can get that kind of behavior with these trends. And then we also get change in news. So the model is forecasting by June, we're going to get some better news. It may just be the short-term news cycle and no serious change for the economy or the fundamentals going in the economy, but at least the news should change. But it might be something more important, and it might even link to tomorrow's CPI report. If that CPI is lower, I think they're going to buy stocks. I think they're going to gamble. It's going to be lower in June and July and lower on into next year. And they're going to take a gamble to buy back what they've sold. It's been panic selling. This is money driven this time around. I didn't mind the decline going into January into February. That was because the economy was going to slow down. We were going to have business problems. We were going to have issues. It was time for a bear market. We got a nice bull run we correctly called going in March, where people said, good enough, it's low enough price, buy it, the business will get better, the economy will get better. And then as it rolled over, They just plain panicked off of the idea, you know what, the Fed is serious this time. They're going to fight inflation. This is a war on inflation. It's probably going to hurt the economy. I know I'd like to do nothing, just set on my stocks. So many times I've gotten out of them and then they just shoot back. Okay, when I say I'm speaking for the people making this market happen. Okay. And it really just come to people just watching other people. Uh-oh, Johnny's selling. Oh, Jack and Jill are selling. Woe is me, I better sell, okay? And granted, everybody made good money last year, and nobody wants to give it back. And it was coming low enough where people saying, you know something, if I'm not careful, I'm going to get back quite a bit of this. And what am I doing here? If they're fighting inflation and if interest rates are soaring, and you look at it, in the last 2 weeks, it correlated very well. If interest rates popped that day, stocks went down that day. If they popped the next day, stocks went down that day. It's a very simple system for them. And apparently they're just going to do it until we run it all the way to zero and interest rates go to 10% or some nutsy thing. And I say that with the attitude, it's not going to work that way. Something will burn it out much sooner. And it'll get over. Now look at this weekly indicator. It's oversold here, trying to turn a buy signal even though the week is down. Now if we do get a buy signal this week, but it closes down for the week, that lowers confidence. Normally, to be a conservative trader, investor, you would wait for the next week to see if it's up some more, and the indicator is still on the bull side. It followed through on a buy signal. Then you'd say, okay, now I have confidence we got some kind of a bottom. Problem is, you hate to miss out on any upside to wait to do that because maybe it just explodes all that week, and then at the close of the week you say, gee, I'm highly confident of a bottom, but I don't want to buy here now. So it depends how can you take that risk of being early. Okay, in other words, do you take that chance of following that indicator when it's quite possible the indicator's wrong, that it was a knee-jerk reaction for the indicator, market went down anyways. So it'd be nice to see them coincide the same week. It makes it a little easier, raises confidence, makes it a little easier to take the chance, okay? Something else that could provide evidence that the weekly thing is turning around is obviously a positive weekly reversal, down then up the same week, and hopefully closing higher than the prior week. Another thing to look at is trade over the high of this week at 4,099, a little bit different number. If it would close above that, and of course there's a gap above it, so it's probably safer to use the prior week's close at 4,001.1950 to say, hey, if it gets above that, I like it. I'm going to take a chance. Maybe I just get caught in a knee-jerk reaction, will feel like a sucker later, but we're starting to put the odds in favor of buying, okay? Now, the thing is, we're showing this market may take all month the bottom for these bottoms, and by the way, if this truly is a level one, it's the second opportunity, but even greater probability now because we're stretching rubber band for a minor long-term bottom, put an end to the correction this year, put an end to a major correction within the bull market this decade. Now, I don't call it major, I call it an actual bear market, though, and call it a minor bear market, okay? So something else to watch is when it goes above that 4,300 level, I say it's going to move right on up to 4,500s. Obviously, we got to watch the 4,400 first. But that's kind of enough of a retracement that people going to say, wow, something's changed. And then they're going to get real nervous. They sold too late, sold too much. That may help us take it even higher in June if we can get the evidence of fixing this inflation. If we don't get the evidence of fixing this inflation, people may not like it. It went above 4,300 and they start buying, but they then could be the suckers in the sense we got more bad news coming in July. We know there's an issue coming in July. It's just a matter, is it minor, doesn't matter anymore, doesn't even work, or is it something serious enough to bring the market back to, say, the low of May or lower? And it may. It's something we got to deal and work with. Looking out to August and the year end, I say the market rallies, the economy gets better, the news improves. I think in September and October, you're not going to see much weakness out of the seasonal pattern. We've really come up with a screwy year this year. Should have been bullish into May normally, maybe even bullish all the way into September, and then September and October would drop, or it would top out sometime May, July, and by September and October it drops. And in November and December are usually the best months of the year. September and October are normally the worst months of the year. Well, hopefully we got the worst all the way out of the way. I just feel like it's not going to work. September and October may actually be up months, and I don't think the election this year is going to cause any problems more than, say, a day or two or a week, something like that. At any rate, November and December, I suppose, could be odd because the whole year is kind of messed up and maybe the seasonal won't be as bullish, but I think it's going to be about average to above average. I think it could be fairly bullish. And then I see this extending next year, these level ones, level twos, level threes, causing all those twists and turns and worries and scares, and yet the market just moves higher next year, and I think it's going to be an outright up year. This year was supposed to be down, then up. Well, we certainly got the down. We had a chance to start turning it up, and it failed on us. And it just looks like there's no reason to let up. It's probably going to be better later this year. Next year should just be an up year. In 2024, it could be up all year long. It could be up for some or most of it and can roll over towards the end of the year. 2025 is what we got to watch out for. 2025 can be a similar year, or it might even be dissimilar and entirely different news story, but it could be down 20% on us, just like what we're doing this year. It can be a 2022 year in 2025. But 2023 ought to be great. Okay, now if for some reason it's not so great, maybe we have lingering inflation issues, maybe we have the interest rates just a little too high and it slows business down, but I really doubt it. I think we're probably going to see the interest rates back off actually later this year on into early next into some kind of minor long-term bottom. And at least they stall out. Now, the Fed may continue to raise rates during that time, but I think even the Fed later this year is just going to stall out. People are going to find out. You're going to see people saying, oh, they got to raise rate 12 times nonstop. My guess is we get up about 7 or 8, and suddenly people go say, well, they don't have to raise them anymore. Okay? All right, so what's going on with the interest rate market here? Fascinating behavior here. Spiked into our range and then fell overnight. It left a little trader's gap, so probably it's going to pop up someday, but trader's gaps are not as important as breakdown or breakaway gaps. But anyways, the model's saying interest rates can decline into tomorrow and maybe beyond tomorrow, so the inflation report tomorrow may have something to do with that. It can place a level 3 bottom tomorrow, sometime this week, and be higher next week, but I can see that for some reason interest rates stall out over the next 2 to 3 weeks into the next level 3 bottom. And the reason for that is a larger trend, and this is a larger trend. It goes from a level 2 bottom to a level 2 or top to bottom, going into a more important level 1 bottom, hopefully, coming down to more important level 1 bottom. And the point is, it could bottom this week as well, and the rates just keep marching higher on us, and we know the Fed's going to probably continue to raise. I'd like to see the Fed actually only do a quarter point next month, but maybe they should do a half and then just flip to quarter points for the rest of the year. And like I say, I think in the fourth quarter they'll actually skip some to say, nah, we're not going to raise it this month. So I don't know how low this rate can drop. I'd like to see it challenge this at 2.9%. That can help the stock market, support the stock market. Hey, if they were selling because rates were surging, why wouldn't they eventually buy? So far they haven't done that. But it may be a time they're getting ready to do that. It may be a time as they go into the CPI report, they want to chill out a little bit. And then if they like that report, that can change their attitude. That they'll sell less if interest rates jump, and they'll buy and even buy more if interest rates drop a little later, and interest rates might actually drop off of that inflation report. All right, I know I'm taking a long time here and adding a lot of information for just a morning brief, but here's the dollar. And the dollar is trying to prove me right of a top here, but it's just because the interest rates are lower. If they go higher later, I'm probably going to be wrong. I'm going to be early. I've warned you. But unfortunately, I just got to do it. I got to try for it. That the dollar can back off going into June, that may be a sign the stock market's going higher, and the stock market should like a lower dollar. Now, I don't think the dollar is coming down by huge amounts, so it's not going to help commodities, and it may not necessarily help the stock market either. Now, Bitcoin, okay, is just falling apart this week. It's right in line with the stock market, but the model's saying this is the last week for a bottom, level 1, level 2. And notice it finally dropped in these lower targets I set months ago and kind of gave up on, but it dropped into those targets, and it's trying to be buoyant. It's trying to work its way up out of those targets. Well, that's primarily because the stock market's up this morning. If as long as it's going to keep the correlation, the stock market, and yet we could be right on this forecast of going higher into June for Bitcoin, then the stock market's going higher into June. So I kind of like this, but if the Bitcoin people suddenly have a disconnection there, then In other words, I don't know how a lot of faith of doing a reverse modeling using Bitcoin to predict the stock market. Okay. But the point is, it may work. And look at it. It's oversold trying to work on a buy signal right now. And it should rally one way or the other. But is it running too late and giving us a warning they're just wrong? It's not going to work. I don't know. But if we can just see a positive week reversal, it's probably on its way higher. And then we flip over to the gold market. I'm very convinced this year the gold market just said, I briefly got caught up in that Russia-Ukraine thing and rallied, but it really does not want to rally off inflation. I think gold assumes we'll beat inflation one way or the other. There's just no really a good reason to hedge for higher inflation. I also think, though, some people got it right and moved over into the copper market and some of the other commodities for hedging, and it took away some of the demand for gold. Then, of course, the Bitcoiners, they couldn't help themselves. They had to use Bitcoin to hedge for inflation and be against gold. I think they've given up on that. Okay. At any rate, I don't see much happening for gold. I think it'll all go lower in the next few weeks, but it may not go much lower. And it may feel it gets some support. It's starting to get oversold. So not really all aggressive, bearish on it. And then in the crude oil market, okay, we may see this week, the price action this week is weak enough to assume an early level 2 bottom or top after the earliest allowed level 1 bottom, and it's just going lower into June. Well, that would help the stock market. But will it disconnect? I don't know, because I'm a little concerned the oil market will say, well, if the stock market's going higher, we're asking more for oil. We're going to put it up there. So this might be nothing but a volatile level 3 intra-month swing, and it's just going to recover on us. They got scared over the stock market falling, got scared of the economy falling, and maybe if inflation's down that report, they might actually like it and say, I'll put the price right back up. So we may be off the mark here. It rebounds and then pulls back, and it may not pull back much just because the stock market does rally in June. But I'd like to think it can disconnect from the stock market and it just works lower, and that is our best forecast. I don't trust the upside. I think it works lower, but I don't think it's going to work lower by a huge amount here. Okay, we got to top out the heating oil and gasoline. May not do that to summer months. Hopefully we can do it by Memorial Day, and that may hold the crude oil up. Normally this time of year I assume crude oil can go down, but gasoline, heating oil can go up, and it's working, and that's the way the crack spread traders are working it. Okay, but at any rate, at least for the stock market, I think obviously a lower oil price would help, because it makes them think, well, maybe other things are coming down and we're working on lowering that inflation. All right, don't have much else. The other indexes, as far as I'm concerned, the NASDAQ, Dow Jones, either lead or lag here. Here's our intraday chart again. This is a 6-hour chart. And it looks like it wants to go higher this morning here for the stock market. But what are they going to do about the gap that they'll probably create this morning? Will they fill it right away, or are they going to run it up and fill yesterday's gap? If so, we got a nice run up coming here. But I'm nervous that gap's got to be filled someday, and they're just going to have to put it right back down again. They just love the day trade and intra-week trade, these gaps here. Past results are not necessarily indicative of future results. I guess I'm hoping we get some more decisive information tomorrow out of that CPI report. I'm hoping it favors the bulls in the stock market, and the stock market moves higher into June.